So for simplicity's sake of this video, we're only going to be talking about sole proprietorship, so not corporations, and we're only going to be talking about businesses that operate in Ontario. If you fall outside of this, then you may want to speak with a tax professional. I'm Ainsley Herlihy, and I'm a bookkeeper at Income Tax Plus, and today we're making a short little video of some frequently asked questions about small business taxes and maybe a little side hustles. So today we're going to be going through some things that might help answer some of your questions. What does it mean to be self-employed? You could be a subcontractor, you could be a member of a multi-level marketing team, or you could have your own small business. This means that CPP, EI, federal and provincial income tax are not being deducted from wages that you're earning. So when filing your taxes, we need to calculate these amounts for you. So when filing your small business taxes, we need to include a statement of business activities that goes along with your personal T1 general return. As a self-employed person, you may need to pay provincial and federal income tax, Canada pension, but you don't necessarily need to be paying into employment insurance unless you voluntarily choose to enroll in that program. There could be a number of different reasons why you might choose to do that, and that's something that you might spend some time looking into to see whether the benefits outweigh the cost. We take any sales or any income that you've earned from your small business, and we deduct any expenses that we can claim against that, and then we come up with a net income figure, which is where we calculate your income tax and CPP from. So you need to pay into Canada Pension Plan if you've earned over $3,500 in net income. Something that you might not know is that as a self-employed individual, you're also on the hook for the employer's share of the Canada Pension Plan contributions. So that means if you're working, as an employee at a company, they're deducting some Canada Pension Plan contributions from your wages, but that company's also contributing their portion to your Canada Pension Plan. So as a self-employed individual, you actually have to pay both the employer's share and the employee's share, your personal share of the Canada pension. So sometimes that gets it can be a little bit surprising come tax time. Federal and provincial income tax is calculated based on your deductions. So for most people, that's about $13,000 in the tax year. So if your net income is higher than that, you'll be paying into federal and provincial income tax. So income tax is progressive, meaning that the higher your net income, the more tax you're likely paying. So it's hard to give, a percentage figure or dollar figure to a client right off the bat without seeing what their net income is. If you're trying to prepare for tax time so you're not surprised, I love using the free online simple tax calculator where if you're able to estimate your net income, then you can just plug those numbers in and it will calculate for you based on basic deductions how much you're paying into Canada Pension Plan as well as federal and provincial income tax. So from there you can kind of decide how much to set aside for tax time. So tax is based on your total income. So that could include investment income, employment income, self-employed income. So the tax that you're paying is based on what your net total income is. So if you're working for an employer, they're deducting some tax at source as well as CPP and EI. And then if you have a side hustle or a small business as well, then those incomes will need to be added together to calculate how much you're paying into these, and then we can figure out if you owe or you may have a refund. We always suggest to have a separate business account or a business credit card. It just keeps things a little bit cleaner, and if you did ever get audited, you've got one set of statements to share rather than going through personal bank accounts and such. So we like to use the word reasonable because that's the word that the CRA likes to use. So any expense that you can reasonably explain is a business-related expense. So here in our office, for example, I mean, some obvious ones are, stationery, papers, pen, computers, software. All these things are expenses that our business is required to have. But something that you might not know would be a business-related expense for our business is last year we bought a TV for the waiting room. So on a receipt, you might think, okay, a television isn't really a business expense, but we have it sitting in our waiting room so that we can have some instructional videos for clients. So that is absolutely considered a business expense. So the CRA actually has a really helpful list of expenses where they go into a little bit more detail, especially for things that would be maybe a gray area. So it'd be really helpful to check that out on the CRA's website. So where it gets a little bit more complicated is when we're talking about expenses that can be personal as well as business related. So I'm thinking about vehicle related expenses, cell phone, home internet, or some business use of home expenses. So I'll go into a little bit more detail about that. So for vehicle expenses, if you have a vehicle that you're using to do your groceries as well as visiting your clients, we need to come up with some kind of a percentage of what expenses can be claimed on your statement of business activities. So the CRA states that the best way to support your claim would be to have a vehicle logbook. So you can literally write this down every single time you get in the car for a business-related trip. We like when you take the odometer reading at the beginning of the year and the end of the year, so we can come up with your total kilometers driven and then your business-related kilometers. And that gives us a percentage of things that we can claim. So we can claim a percentage of your fuel, your insurance, any maintenance, lease payments, interest on your vehicle loan, highway tolls, anything that is related to your business vehicle. We just need to come up with a percentage if it's not 100% business related. We have some logbooks that you can actually download on our website if you're doing it the old-fashioned way by paper and pen, but I really love sharing the app Mile IQ with our clients. Basically, every time you get in the car after you've made your trip, you can swipe one way for business related or the other for personal, and it actually sends you monthly reports and annual reports so that it's easy to keep track of your business related travel. So similarly, for using your home as part of your business operations, you can claim some business use of house expenses if you meet the following eligibility criteria. So it has to be your primary place of business, or you have to be meeting clients there regularly. The best way that I like to explain this to clients is to figure out the total square footage of their home and then figure out a square footage of their home office or a space that they're using in their home strictly for business purposes. So from there we can come up with a percentage, and then we get to claim all of your household bills as well. So heat, hydro, property tax, mortgage interest. Maintenance is a little bit more of that gray area. We're not going to be claiming, a kitchen renovation, but if you wanted to include, a light fixture or some light bulbs for your home office, then we can absolutely include that as well. Some of these things, if it's used strictly for your home office, we get to claim 100% of it, whereas if it's used throughout the house, we would claim the percentage that we've determined through your square footage calculation. So you need to register once you've hit $30,000 in sales in a single calendar quarter or in the previous 4 consecutive calendar quarters. You can also choose to register an HST account before you've hit your $30,000 in sales. So this is also sales, not the net income after expenses, strictly what you're bringing in. So you might choose to register early if you know you're going to be hitting that $30,000 within the 4 consecutive calendar quarters, and you have a business that requires some continuity. If you were a car detailing company and you have a lot of the same customers, say your average sale is $100, and you don't want those same customers, a few weeks or a few months down the road to all of a sudden be paying $113 for the same service that you're offering simply because you've registered for HST. So you can choose to register early so that you're continuing, that throughout. So once you've registered for your HST account number, you're required to collect 13% of your sales and remit that to the Canada Revenue Agency. So you can choose upon upon registering to remit it quarterly, annually, or monthly. Some businesses sell products or offer services that are considered either zero rated or exempt from HST. So if you think that you'd be offering some of these services or products, it would be a good idea to contact the CRA to make sure that you're falling into the right category, or come see us here at Income Tax Plus. Now that you've collected 13% of your sales, you don't necessarily have to take that 13% and send it directly to the Canada Revenue Agency. So you also get to deduct the HST that you're paying on your business-related expenses, and we call these input tax credits. To oversimplify things, we take the 13% that you've collected from your sales minus the HST or the input tax credits that you've paid on your expenses, and we come up with a number that you have to remit to the Canada Revenue Agency, and in some cases they have to send some money to you if you've made a big purchase. So once you've registered for your HST account, we're now preparing two sets of tax returns. Your personal income tax return that includes your statement of business activities, as well as your HST returns. And now that you're a self-employed individual, your tax filing deadline is actually June 15th. But if you have a balance due, it's still due by April 30th, so we always recommend their clients bring their tax information into us by the beginning of April to make sure we've got enough time to calculate your tax payable. If you find yourself hiring employees, this would be a really great time to sit down with a tax professional and go over some details. This is something that can be done on your own, although it can be a little bit complicated, and payroll services are often very cheap. So that's when you would want to contact a payroll service provider, or think about an accounting software that could do some of this stuff for you. So the CRA wants you to keep copies of all your receipts in either paper or electronic format, so in the event that you get audited, you can support all of your claims. So we ask you to organize all of your expenses into category rather than say, by month, because that's the way that the Canada Revenue Agency likes to see it. So when we're completing your tax return, we're actually putting these expenses into categories like purchases and office supplies, cleaning supplies, etc., etc., etc. So our website actually has a handy little worksheet that you can print off that actually breaks out these categories the way that the CRA likes to see them. Now that worksheet's also very broad, so it might be applicable for somebody who's a hairstylist and maybe somebody who's a drywaller. So there's going to be some categories that you might not find any expenses fit into, and that's fine. So when we're filing your tax return at the end of the year, all we need to see is a summary of your income and your expenses. We can do all the calculations when it comes to your business use of home expenses as well as your vehicle expenses. We would like to see a summary of all of those categorized. So that can be on a spreadsheet that you've created on Excel, that can be using our business activities worksheet, or you could be looking into an accounting software like QuickBooks or Sage 50. So we hope that we answered some of your most frequently asked questions about your small business or side hustle. But if you have more questions, we love talking about this. Call us at the office or visit our website for some of those free resources, and we can't wait to hear from you.